we can see here that when price moves, there's a few different features. Number one, like in this particular case, for example, we have, you see how price moves in this phase. This is a 15-minute chart, so it's a pretty inefficient move. We dropped and we stopped. Then we have another highly inefficient move. Then price stabilizes, and it's actually waiting on data. Once this breaks, it typically will draw back into this leg. These small areas of order flow will see price response, and we actually make trades in and around these areas. But if you compare an area like this versus a larger area of just resistance, we want to see two price features. Number one, we want to see a very, very clean and open and inefficient break, because notice how the volume dropped off. We have the highly inefficient move on the price break, price stalls, and continues. Now, as price is drawing back up this leg, we're looking for price responsiveness at the point of origin of these moves. And so we actually see it here. We see this little bit of volatility. We make trades in these small areas of volatility. This one doesn't get that far, but that's where we make trades. But we're more interested in these areas here. So we see price comes back up to the point of origin and responds. This was a late day move, late session London close move, which is actually, we prefer the London close move, but price just sticks. Notice where it sticks. You see how we have an area of volume here. Price runs out. It's overridden by this area of volume, comes back, and when it comes back, it stops right here at this area of volume. To us, that's important for managing our trade, and then it just consolidates into the weekend, basically. So now let's just have a look at some of the recent price behaviors on the pound dollar. So the pound dollar today, we had negative manufacturing earlier today. So you'll notice that price obviously drops off prior to the data event. We have the data event, price moves and breaks out. Let's look at this in a smaller time frame. Here's our 5-minute chart. Pre-data, the data comes out, and now when the data comes out, some people might say, well, look, price moved from 64.20 down to 63.20. Why didn't you sell it up here? Well, there's really no frame of reference. Data is a 50-50 shot, this type of data point. However, what we're looking for is look at the price move post data. So you can see, well, this was early in the sessions here, so we had an inefficient move, and then when data came out, watch what happens. Data is price volatility is a function of liquidity. So price runs up, comes back to the pre-release price, and then starts to run. So this move up right here is quite simply the market basically filling in the spread. Okay, so but you'll notice how it feeds simply back into this Friday move. Okay, so on the Thomson Reuters Icon platform, these numbers are heavily noted. So as price starts to move, here's what we're looking for. Number one, we would look for a sell here, but you couldn't sell it there because of the nature of the price move into that level on this particular day. If price moved higher towards the point of origin for the day, then that could be more of a sell. So again, I'm just want to give you a feel for the price behavior, because some of you may not be familiar with price action. You use a lot of indicators, so I just want to kind of bring you an acquaintance with this, and then we'll get down to the 1-minute chart and specifically what we look for at entries. This is a pound dollar 5-minute chart. So notice how liquidity is very thin, price spikes down, but every time it breaks the low, it draws back up into the break of the low. So price is highly inefficient here. When it breaks down to a new level, you will see price will run. If you ever notice the break of a low, price will jump, and it typically jumps quite considerably versus when price is inside an existing trading area of order flow. Price will jump. So when we'll see here, Then price makes a new low here. It jumps, comes back up, consolidates, comes down. Notice the change in price when it accelerates through this low. Price jumps lower, comes back up, and then we have a new area of order flow. And I just mentioned this earlier. Watch how price behavior drops off. It gets quiet, so liquidity is being drawn from either side of price. Then as it starts to move, it's got to find liquidity, so it jumps through the lows, seeking liquidity, draws back up into the lows before consolidating. And then it comes back up again, responds to this price behavior. Now it's getting very, very quiet. And we don't see any data coming out, any notable data coming out here in the near future. So we may start to draw back up this leg here. So if it draws back up the leg, we're looking for sells at 63.80. If we move lower, what we will do is we'll wait for a break of the low. If we have a significant, like if we have a move, just like one of these moves, exactly like one of these moves, through this low around the big figure, we would trade this. Okay. So right now, price is extremely quiet, and you can see the change. We have order flow, price rallies. We have a change in order flow. So now we're just sitting waiting to see where it's going to break. We don't chase price. We trade into a price move, which will now bring us into what we're looking for on the entries. Okay, so maybe that gives you, I know it's really hard to give a very short synopsis of this, but it gives you a bit of a feel for what we're doing. So we're trading intraday volatility on price behavior. All right, and again, I mean, I realize we got a blue indicator here. It's just there to kind of make things look pretty. I don't even use it. But this is right now gives us a good sense of the order flow. So as price rises up from 49 to 60, we should actually see, assuming there's no major price driver, we've got equities opens in 6 minutes. So we should see a little bit of just change in order flow. We've got an inefficient move from here up in towards 60, more so 80. 60 would be a secondary level, but 80 to me is a lot more interesting. This breaking point from the data right here at 80, to me, we should see a reasonable price response. Here, not a tradable one, but we'll still probably see price stalling in this area, particularly if it's inefficient. So what we look for, so if we take it down to a 5-minute chart. Sorry, a 1-minute chart. What we're looking for is this is current price. And let me just try and get the best picture here. So we talked about the inefficient moves and the breaking point of the inefficient moves. So, for example, you see what's happening right at this very moment. It's a good example. We kind of carved out this little area of consolidation on the 5-minute chart. Now we're at a 1-minute chart, and look at how price consolidated. So on a relative basis, the 1-minute chart is very noisy. It's very noisy, and you don't want to. We don't trade off a 1-minute chart. We don't pick our levels off a 1-minute chart. Sorry, a question just came in here about the 1-minute chart's too noisy. And it depends on how you trade. But the levels that we're looking to trade at, we pick the higher time frames, okay, 15 minutes and higher. Typically, more we like the 60-minute charts. But we are executing based on the price behavior of the 1-minute chart. All right, and because the subject matter for this webinar is entries, we're going to take you down to the 1-minute chart to show you the price behaviors that we're looking for.